Guys and girls, winning trades aren't just luck, they're the result of clear strategies and discipline. This week, I backed some solid wins, and in this video, I'm breaking it all down for you, step by step. Let me show you how simple strategies can deliver consistent results. So, as you can see, this is a trade that we did take this week on Jump 25 Index. So, let us start on the daily time frame. You have to know you as a day trader, the highest time frame that you should always start looking on should be the daily time frame. Why? Simply because you are a day trader. You are trading what is happening currently on that particular day. So the daily time frame should be logically your highest time frame as a day trader that you should start on. And as you can see on the daily time frame right here, this market was clearly moving in series of higher highs and higher lows. And guys, this series of higher highs and higher lows, what does it tell you? It tells you that this market is clearly on an uptrend direction. So you can see this market the way it was moving, providing you a series of higher highs and higher lows. And you can notice the way this market was moving, like after every break of the structure, the market retest inside it before playing out. All right. So if this is the way the market has been moving, then you should also know that after the market breaks also this structure right here, it is only logical for this market to come back inside this area before playing out. So we said, okay, now this market is retesting to the previous broken level, and this is the movement that we are anticipating. It is then we went to the 1 hour time frame to see the information that we got on the 1 hour time frame, because this is just an overall direction that we saw on the daily time frame, right? So on the 1 hour time frame, let us see the information that we got on the 1 hour time frame. So the first information that you have got to this video, that you should always start doing your analysis on the daily time frame. So on the 1 hour time frame, we said, okay, let us see the way this market had been moving currently in the previous few hours. And we can see that this market was clearly moving in a downtrend direction. So the uptrend direction, it was seen on the daily time frame, right? But on the 1 hour time frame, the market has been moving on the downtrend direction, providing us with series of lower lows and lower highs. So the pro traders always say that you should always ride the trend. So if the 1 hour time frame is showing us that this market is moving in a downturn direction, then should it be logical that we should also be looking for sell positions only? No. Always go with the information that you get on the daily time frame. If the daily time frame shows you that this market is moving in an upward direction, even on the lower time frame, you should only look for buying positions, because hey, the bulls are way much stronger. All right. So we entered a buy position after the market broke this level right here. Why? Why did we enter our buying position after the market broke this level? Guys and girls, I understand that these concepts can be very hard get for some of you who are beginners in this forex game. If you're struggling to understand these concepts, you have to understand that every trader starts with struggles, and it is 100% normal. The difference between those who make it and those who don't is just simply resilience. You have to keep showing up even if this concept can be appear to be troublesome for you, and you need to keep refining your skills. And remember, every loss that you will encounter is just a tuition for the success ahead. So we entered a buying position after the break of this structure, because we know when the market is moving in series of lower lows and lower highs, and when the market comes and breaks the previous lower high right here, simply says that this is a shift of the market structure. Like the market that has been moving in series of lower lows and lower highs is making a shift from moving in those series to another series of higher highs and higher lows. So we are anticipating the market to come back to retest and move series of higher highs and higher lows. That's just simply typically the way the market is supposed to move in an uptrend direction. So we said, okay, since the market has already broke right here and we entered this trade right here, and currently our take profit that we saw on the screen was on our risk reward ratio of 1:3. So we normally trade using a risk reward ratios of 1:3, because we need that mindset of winning trades regularly. All right. We know this market can buy for a long time. We know this market can buy for a long time, but in order to always keep winning, we always go to the risk reward ratio of 1:3 to avoid any regrets. All right. If this market continues to go up, we will also ride it. Why? Because we know how the market is supposed to move. It will move with series of low lows and low highs. So if the market comes to our entry, to our area of liquidity area, we will enter this trade again and continue to ride it. But our risk reward ratio is fixed. 1:3 or stop loss. That's it, and that's how we trade. Guys and girls, if this strategy makes sense to you and you want to catch trades like this in real time with me, click the link in the description to join my Telegram group. That's where I share these setups and walk my team through every and each step. Please, if you have enjoyed this video, do not forget to like, subscribe to this channel so that you may never miss any of my future videos. Happy trading day and bye bye.